question. And this is what we're arguing. We think this is a shift to a new reality and price level for silver, meaning when you move out of this zone we've been in for 50 years, okay, and you go to $100, $200, you're not coming back to 50. You're going to live in a new range. Yeah, there will be sell-offs in that range, but the level has got to be sought out first. And frankly, you can look at a monetary degradation issue, like you mentioned, the money supply increase. Well, if you compensate for that, we'd be $200 easily. Okay, and our subscribers have been handheld for the last years. We got bullish in February of 2016, two and a half months off the bear low.
Yeah.
Annual momentum of gold and silver said, it's over, I'm going back up. Nothing has changed the annual momentum of gold and silver, very long-term trend metric, okay? Nothing has altered that view. So it's been an ongoing bull for 10 years, and we're now at the point, I think, where the acceleration phase, the dramatic phase, where half the move occurs in 6 months, is about to occur. And I think for silver, it's likely to take us at minimum, I'm talking like sometime in next quarter, first quarter of next year, to 100. And if, on the other hand, in the first 3 months, don't be shocked if this happens, meaning 8, 9, 10, okay, if we get up near 100, then I think we're going to about 200. And
wow.
No, it's not insane.
For months, markets have been obsessed with the wrong debate, gold versus Bitcoin, granddad's money versus the crypto generation. But while headlines argue about which currency wins the decade, a far more important signal has been forming quietly beneath the surface, a signal that most investors haven't even noticed. And now, according to legendary momentum analyst Michael Oliver, that signal is finally approaching its trigger point. Not a trend, not a narrative, a structural shift. A shift that places silver, not gold, not Bitcoin, at the center of the next monetary revaluation. To understand what's coming, you have to revisit the moments when silver detached from its past and entered a new reality. 1979 and 2010. Two explosive phases, two breakouts that weren't gradual, but vertical. In both cases, silver had already been rising for years. Gold was rising too. But the moment the silver to gold spread broke out, silver left everything behind. 5 months in 1979, 7 months in 2010, a lifetime of gains compressed into half a year. And today, the spread structure looks identical to those moments, pressing against a breakout ceiling that hasn't been touched in 3 years. That is the historical pattern. And once it breaks, the same process begins, the electric phase, the vertical phase, the phase where price corrects decades of mispricing in months, not years. Also, Michael Oliver adds something critical we may not have noticed. The trigger is not price. The trigger is the silver to gold spread. Right now, silver sits at roughly 1.12% of gold's price, extraordinarily cheap by long-term standards. Across 50 years of data, silver has reached 2% of gold's price in 21 different years, even in years that weren't bull markets. And in the explosive phases, 1979, 2010, 2011, silver surged to 3% or more. Oliver's work shows the breakout line today sits near 1.31%. If the spread closes a month above that level, the vacuum between 1.31% and 2% opens instantly. No resistance. No digestion phase. Just repricing. The exact same setup that preceded the 1979 explosion. The exact same setup that triggered the 2010 detonation, and once the spread breaks out, the clock starts. Michael Oliver delivers a strong price projection. When this happens, we could see silver jump easily to $150 an ounce or even $200 an ounce in a matter of weeks. Now we'll show you more clips of the latest interview, but first smash the subscribe button and turn on notifications so you do not miss out on our daily recaps.
Now, this year it hasn't. It's actually up more year to date than gold is, okay, by a couple digits, okay? So it's significant this year. But historically, it's still very low relative to gold. Like silver's trading at 1.2 0.125% the price of gold right now.
Yes,
We do
80
it
to
as
1?
a
It's still
Yeah, no,
70
we
to 1,
don't do it
80 to
that way.
1?
We divide an ounce of silver into an ounce of gold, express it as a percent. And if you go back over that 50-year span of time, we don't show it here, but silver in 21 of those 50 years that we've had has at least been 2% of the price of an ounce of gold, minimum. And in bull trends like 79, 80, and we're in a bull trend now, right? Okay.
Yeah.
Or in 2010 and 11, silver was 3% or more the price of gold. So right now at 1.125, silver is very cheap relative to gold. But it's technicals of that spread relationship. And we study it, week by week, month by month, and we run momentum of the spread. Momentum is now breaking out. It's telling us the spread itself that is rising, favoring silver since the beginning of the year, or especially since April, by the way. No, since April, sharply. It still hasn't broken out on the spread, but the spread, you get above 1.31% to get bean counting for you.
Yeah.
And we're headed toward that level. You're going to blow out like a 3-year high on the spread, in which case you're going to go. You're going to rush. Why is that important? That is the prominent indicator back in the 1979 to 80 surge, this final 6 months of that move. Silver had already been going up for years, so had gold. But suddenly in summer of 1979, that spread broke out of a situation it looks just like now. In other words, a potential breakout level, silver versus gold. It's at that point that the net price of silver, not just its relative performance, went boom off the page. I mean, it left gold behind. Gold was still rising, okay, but silver just went whoosh, okay. Exact same thing happened 2010. Like in September of 2010, silver had already been rising for years, so had gold. The spread broke out again. Said silver's, I'm back, okay. And by April of 2011, silver had gone from 28 bucks to 50. From that point, we're at that cusp right now, where if you go through that level that I just mentioned, and
1.3.
we're nearing, 1.31. You get above that, there's a vacuum between you and 2%. And that's not necessarily resistance. That's just a level we've been at 20 of the past 50 years, okay? So it's hardly exciting to get there. But that is us. So that's why I'm emphasizing silver, because I think silver is vastly undervalued. And you could even see it on the price chart I've got there.
Yeah. And we'll show that chart.
Yeah.
I mean, is that how you know when to start taking profits and when to sell?
No, it's when if you're not in, where to initiate positions. Okay. I'm already in, and our subscribers have been handheld for the last years. We got bullish in February of 2016, 2.5 months off the bear low.
Yeah.
Annual momentum of gold and silver said, it's over, I'm going back up. Nothing has changed the annual momentum of gold and silver, very long-term trend metric, okay. Nothing has altered that view. So it's been an ongoing bull for 10 years. And we're now at the point, I think, where the acceleration phase, the dramatic phase, where half the move occurs in 6 months, is about to occur. And I think for silver, it's likely to take us at minimum, I'm talking like sometime in next quarter, first quarter of next year, to 100. And if, on the other hand, in the first 3 months, don't be shocked if this happens, meaning 8 of these, okay, if we get up near 100, then I think we're going to about 200. And
wow.
No, it's not insane.
In previous cycles, gold and silver surged in environments far calmer than what we're living through now. Today, we're dealing with record global sovereign debt, eroding purchasing power, rising deficits across the developed world, and industrial demand for silver accelerating because of solar, electrification, and AI manufacturing. And unlike gold, silver has been trapped in a 50-year sideways range, the same price zone it touched in 1979 and 2011. Nothing in the modern economy resembles 1980 pricing. A loaf of bread doesn't cost the same. A gallon of gas doesn't cost the same. Housing doesn't cost the same. Nothing does. Except silver. It is the only major commodity that has not been revalued into a new monetary reality. Lead has done it. Copper has done it. Beef has done it. All three broke into higher price realities years ago and never returned to their old ranges. Silver is the last one waiting. And the spread says the waiting is over. When the spread breaks above 1.31%, the chain reaction begins. Gold's bull market, silver outperforming gold, silver entering a new price reality with silver miners outrunning gold miners, and a fast repricing phase compressed into months. This isn't opinion. This is exactly the sequence that appeared before every explosive silver move of the last 50 years, and momentum has already broken out on a weekly basis. Let's get back to the rest of the interview.
Also, when you look at the silver chart, it's very important because that log scale gold chart, I've got this red arrow going up over the 5 decades. It's been wave after wave, but higher and higher and higher. Silver, you could draw a line sideways through 1979, and we had 2 peaks at 50. We're only marginally out above that now, and so it's been caught in a 50-year range.
Oh, the buildup is, it is. It's primed. And I mean, what can you buy? What costs the same as something that you can buy in 1980?
No.
Nothing.
Nothing.
I mean,
not even a loaf of bread. Nothing.
And I mean, adjusted for inflation, we got a long way to go to even reach a new all-time high in silver. But to my just further, I mean, it doesn't, once it goes through that 2%, to 3%, it doesn't last long up there. That's kind of what I meant.
That's the question. And this is what we're arguing. We think this is a shift to a new reality and price level for silver, meaning when you move out of this zone we've been in for 50 years, okay, and you go to $100, $200, you're not coming back to 50. You're going to live in a new range. Yeah, there will be sell-offs in that range, but the level has got to be sought out first. And frankly, you can look at a monetary degradation issue, like you mentioned, the money supply increase. Well, if you compensate for that, we'd be $200 easily. Okay. But there's some other charts I've included too that sort of smack you in the face. The next set of charts that I sent is 3 simple, stupid commodities. Okay. These charts are all from the Federal Reserve of St. Louis, Fred. Okay. Yeah. And one is the top chart is the price of lead. Okay. Going back to the late 1980s. In fact, you could go back to 1980, and you'll see that the first phase of that price action is the arrow on the left at a very low level. It just goes for decades sideways. It sort of looks like silver today, where it was in 1980. Okay. But look what happened to lead. It just suddenly went boom and quadrupled in price. Not because of a crop failure. Okay, we're talking a base metal here. Wheat can explode because of a crop problem, but a base metal doing this, and by the way, other metals did the same thing around that time. But it went to a new reality, and yes, then it dropped off again. But look at the new reality that's prevailed since then on the lead chart at a much higher level, horizontal for decades.
Yeah,
silver's still in the first range. Okay. Then the second chart's copper and copper products, as the Fed calls it. They incorporate products of copper. Same story. Multi-decade range at a given level. Then suddenly within a matter of about 6 months, you move into a quantum, to a new level, and you go sideways again, but at a whole new reality of price. And now copper's at all-time new highs, above even the 2011 high, which silver has only just done. Okay. The bottom chart is beef. Okay. Pound of beef. Okay. Oh. Look at what it's done since.
Don't get me started. Go to your butcher.
It goes up in layers and then it jolts and in a new reality. Silver's about to enter that new reality. And we know its fundamentals. We don't focus on that, but we know that they've been tight for years. They get tighter. Industrial demand is continuing to rise because of solar and the solar cell stuff. And also AI is creating a lot of demand because silver in micro forms is used throughout the whole system. And yet supply is not increasing. In fact, silver has a unique attribute in that most of the silver that's mined does not come from silver miners who are motivated, of course, by a rising price of silver. They come from people that mine magnesium or lead or zinc or copper. So it might be a marginal issue for them to increase silver production because, frankly, it's just a byproduct of their copper production, et cetera. So they're not motivated by rising prices. Silver has a unique fundamental game The question is, when is it going to do it? We think it's begun. The shift, most of the profit-making phase of the shift, the easy part, is when that spread breaks out.
Okay.
And yes, I think it could be this month. Frankly, this week, if you close where you are now, the spread momentum is already breaking out on a weekly basis. But when you go to a monthly close, we wait for the end of the month. And if you're above that 1.31% level by the end of this month, which is no big deal, we could be there in 2 days, okay? Count on it. Assume that, launch just began via this spread metric. Price is already in acceleration. That's fine. But the point of going crazy was defined in 79 and 2010 by this spread. And I think we're on the cusp of that. And that's where in the next literally handful of months, most of it occurs.
Incredible.
I frankly don't care. We see these CFTC reports and we hear these stories about this, that, or the other shortage in this exchange and so forth. That's all just facts of reality. They've been out there already. They're now just getting more accentuated. And those aren't necessarily good timing mechanisms for when to buy or sell. Those are just factors in the background that have been percolating already. And the point where they go to boil is when the spread breaks out, is what we're arguing. And I think we're on the edge of that. And I just think silver is going to do what's sort of normal. In other words, it made a mistake. You look at those charts that we showed there. You know, how come you go from level A to level D in a matter of 6 months? Obviously, the market had not discounted something properly. And suddenly said, oh, I got to price that in. Well, you know, probably the factors that caused that move were already known. The question was when.
We are approaching the same moment that defined 1979 and 2010 and every explosive silver cycle in modern history. The difference is that this time, the monetary backdrop is larger, the distortions are deeper, and the industrial demand is stronger. The spread is the timing mechanism. And the breakout is already here. Please leave a comment in the comment section, like this video, share and subscribe to get more videos like this. Thank you for watching.